trading setup examples. This is a very important for your starting point. You noticed, the strategy calls for anticipate, confirm, execute. So basically, the idea of trading is not only looking at a level for reversal, because that is just anticipation. You're anticipating a move. The main point is to confirm your trade and execution. Why is that? Not every trade will go exactly as you wish from the exact point or pip that you wish. You have to consider your risk. So, knowing volume profile, you understand that if you take a trade, for example, long from here, and if you know the details as a member, you understand your risk is actually less than taking a long from this area. So let me just convert this to an arrow or normal arrow. So here, so if you're looking at a level long, for example, you're expecting to go long on crude because it's an uptrend. Imagine if you had taken your long from here. See the amount of risk you have. So knowing volume profile, understanding the zones, you have to know where to cut your losses earlier. So a trade example, this is a great trade example. Looking at the two legs of volume profile, you notice I emphasize on two legs of volume profile, and you notice on the short term the crude is going up. If you're a short-term trader, you understand that the crude went, or the oil went through the zone, upper zone right here. I also changed the size of the mouse so it could be visible. You notice that the crude or US oil bounced from here. So to confirm this trade, we had a DRL, 45-minute DRL. If it had come back down a bit lower, it would have been even better, because my stop loss usually would be into the next continuation zone that I want to avoid the market going through. So the idea behind trading for this is to find zones, find trades that are that will give you least risk possible. Now, every trade you expect a stop loss. You expect the market to you expect to have a stop loss. So, what if by knowing this, you can cut your stops from, let's say, you're trading with 30 pips into 15 pips, because now you have to wait for it for the next rejection zone. So this was a good trade example on the U.S. oil. Okay. Uh, Again, trade management is important, because listen, we're doing anticipate, we're anticipating along, we confirmed, and then we execute. Now execution also is important, because now once the market goes in your favor, let's say 15, 20 pips or ticks, you have to take some profits on the contracts that you have and especially if you want to keep a runner. So now your runner is safe, even if the market comes back and takes your stop loss, you still made some money. Of course, trading management is a subject that I teach the students, but it is very important too. It didn't take long actually for the crude to prove right again, by you know coming back down to even a better level for the long as a support level. The risk was even lower in this area. So these are all trade examples. And also for profit taking, you have to mark your levels on volume profile. And you understand there's a profit taking level here. If you didn't not take it already, there's another profit taking area possibly in this level. Okay. And notice how many times the market touched that area before you take a trade. These are all important as examples. Here's the euro yen example. You noticed how on a 60-minute chart the euro breaking down, and at this level here trying to hold it, and it actually held it initially with the help of, if you noticed, with the help of power lines, help of help of DRLs. Volume profile here was prominent area for you. Now you have a continuation possibly down. You see the power line is cutting. You see the sell indicator now is playing a big role. So all these are trading examples. Okay, if you switch to a 15-minute chart, sell indicators not confirming anymore. It's coming down. So in this case, you have to pay attention to this, to these areas. Sell is not confirming. Multiple touches. So this is not a good at this time. It's not a good time to keep short if you're short. Now, keep in mind, since it's starting to come back down, you expected maybe to go up. See how this market is vivid, to go up and touch this area and maybe break it, and you see there's a final level of reversal here. So at this time, if anything, if you're a scalper, you would look for a long possibly on euro yen. You basically scroll down or go down to the lowest chart that you're trading from, which for me is 987 tick chart, or if you want to do 15 minutes. So to me, this looks like a long, and possibly all the way up to here. And from here, we would be looking for a short. So let me mark it and pay attention to it. Meanwhile, so I'm looking at this kind of a move. Um, let's look at the US oil. And US oil did not hold the trade. It moved initially, so if you managed it with maybe 10 15 ticks profit, you're okay. It's not holding at this time. Here's the uh, a wise trader would do. Here's what a wise trader would do. If you have a stop loss here and the market took it, your stop loss was small from here to here. Imagine knowing your stop loss, you're cutting your risk very low. Okay? Imagine if you don't know where your stop loss would have been. You would had it randomly and maybe you would have chased it, not knowing that once the crude goes into the zone, it could continue even lower. Okay? You have to pay attention to all these details. Okay? You understand the power of this methodology by seeing this was a live movement. I mean, nothing after the fact. Same thing with the U.S. oil. If you had not, if you had kept your stop loss here, you would have probably made some money because the market went in favor. You took your profits. We do three contracts trading. So if you taken let's say 15 pips or 10 pips on first two, that is 30, and probably you lost 10 or 15 pips. So you still made some money. So, but imagine if you didn't know where your stop loss would be, and you kept it running, you would have had a bigger stop, okay, bigger loss. um, on the euro, I expected it to come up, and from this area, if there is confirmation, we will be looking for a short. And this is how you should be looking at trading. Logic, logic, logic. On a 60-minute chart, looking at it, it looks busy, but you can always expand it so you can see more details. See how detailed this is. Nice. Looking at the daily, this doesn't give me a lot, but the daily gives me also an idea. The idea is there is a level here too, but it's not very vivid. On one day, which is also a bigger frame, it gives me also an idea. So basically, what I'm looking for is for the euro yen to collapse or come back down again. All right, so this is how you should be trading. Anticipate the market, be logical about it, confirm, and then execute. There was a great confirmation also established right here when the sell indicator hit. So this would have been a good level also for a short. Mind you, the stop loss has to be logical. My stop loss is usually into the next volume profile level. So personally, I would have probably missed this trade because I would have waited for it to come back up here. But again, even if I've taken it from this area, a lot better than taking it from lower. You see this? Because my stop loss would have been into this level, because once we go into this level, it could continue all the way up. So therefore, you cut your losses. And that's how we trade. Thank you.